Hello and welcome to Trends and Futures Position Update. My name is Gary Kamen and today we're going to be covering our stock indices positions. I'll be covering the mini contracts. Those will be the March 2011 contracts. Before I do that, the World Bank announced today that food prices are at dangerously high levels. Currently, March wheat is down 36 3/4, March corn is down 13 1/4, and March soybeans is down 32. Oil prices are dropping on the economy and also on U.S. supply concerns. These concerns are not for lack of oil. These concerns that the U.S. may have too much oil. I read today also that retail sales rose in January, but it was the smallest increase since June, and only half what analysts expected. Some experts think consumers may be pulling back on spending as they pay more for essentials like gasoline. Who are these experts? And are these experts the same as the analysts that had these expectations for January retail sales? Maybe if they'd spend more time trading the markets like Trends and Futures does, and less time on TV, their expectations wouldn't be so high. Now, at the end of this video, I will cover a tool you can use to catch market reversals. On the E-mini S&P daily chart, this is where we liquidated right here for a nice profit. Of course, this drop that day was caused by the Egyptian crisis. We got right back in the next day at 1282.50. Open trade equity as of close, February 14th, that was last night, is $2,262.50. Currently, second resistance is at 1333, second support's at 1319. That would be a profit there of $1,825. And end of trend, 1277.64. That would give us a loss of $243. Technicals, ADX numbers are still strong. MACD is bullish. Stochastics are overbought, but it's a strong trending market. So you're managing a nice profit here. Again, adjust your stops accordingly. If you want to use second support, that's where your profit will be. Or you can go a little lower than that, but I wouldn't go down to end of trend. Let's look at the Dow Jones trade that we're in. This is a little different because we didn't get stopped out on January 28th because of the Egyptian crisis. This market rolled that out, and we're still long from all the way back here on December 8th. We went long at 11,305. Open trade equity as of close, February 14th, which was the close was 12,223, is $4,595. Remember, this is the mini Dow, not the full-size Dow. Nice profit there. Second resistance is at 12,270. Second support is at 12,142. That would give us a recognizable profit of $4,185. End of trend, that would give us a profit of $3,730. So again, you can adjust your stops accordingly using these numbers here. Technically, again, everything's great. Strong trending market, bullish MACD. Market's overbought, but again, I'm not concerned about that because it's a strong trending market. So we got some nice money that we're currently managing in the Dow. And let's go look at the Nasdaq. Here's the Nasdaq daily chart. We liquidated a nice profit on January 28th, being long this period. We got out again due to the Egyptian crisis on January 28th with that drop. We went long on February 1st at 2322.50. Open trade equity as of close February 14th, which was last night's close, 2381.75, is $1,185. Second resistance is at 2392.50. Second support, 2363. That would give us a recognizable profit of $810. Our end of trend number would put us $922.80 in the hole. We'd lose $922.80 if we put our stop at the end of trend. Again, adjust your stops accordingly. ADX numbers are strong trending market. MACD is bullish. We are overbought. Again, not to be concerned about that because it's a strong uptrending market. Again, adjust your stops accordingly here. You don't want to take a winner and turning into a loser. So taking a $1,000 profit and making it almost a $1,000 loss is not a good idea. The last trade we're going to look at is the Russell 2000 Mini. This contract, we actually took out some huge profits on January 19th. We were long this market for a very long time. If I recall correctly, on the January 19th video, we took out around $10,000 out of this trade. But we did go long again on January 26th. That was just before the Egyptian crisis, which is right here. We had our stops placed well enough away from this, so we didn't get stopped out of this trade. We got long at 791.10. As of close, February 14th, which was 823.80, we have a profit of $3,270. Second resistance is at 827.70. Second support is at 816.90. That would lock in a profit of $2,580. End of trend, 785.19, lower than where we got in. That would give us a loss of $591. This market did go below 20 on ADX. Right now it's at 26, so the market is strong. MACD is bullish. We are overbought. As long as ADX numbers keep on going up, we could stay overbought for some time as we did in here. And again, managing some nice profits in the Russell 2000 after taking out huge profits in the middle of January. The tool I talked about, which will help you catch market reversals, is actually the VIX. And the question that always comes up with me is that can the VIX help with catching market reversals? Well, the VIX measures in the implied volatility of S&P 500 index options. Swings are based on supply and demand for options, and some say it measures the fear factor in the market among options traders. VIX movements higher seem to indicate that something is not right in the stock market. As the VIX rises, it warns that large-scale selling may be coming. Let's see if that's true. I'm looking at weekly charts right now. Chart on your left is the VIX. Chart on your right is the E-mini S&P 500 weekly continuation chart. So let's see what's going on. As you can see, when the VIX hit this low here, the S&P was at its high. As VIX numbers started coming up, and the stock market started coming down. What I find very interesting here is ADX works very well on these charts. You see DI plus cross DI minus up, and this uptrend starts up and gets really strong. At the same time, this downtrend gets really strong. Now look where we are today. We're at an extreme low in the VIX. How long will we last there? Not very long. This is a weekly chart, so I don't know how long we're going to be sitting at these lows, or if we even break this area. But the stock market has been going up for some time. We are due for a correction. However, ADX numbers on a weekly chart for the E-mini S&P are at 73. That's a very strong uptrending market. And you could see how we broke through here, and we'll see how we work on this area, and then again see if we can get up all the way up here. Now, just so you know, I don't trade the VIX, but I look at the VIX every so often. It's just to gauge where it is. Now, right now, like I said, you're looking at this at an extreme low. So just keep an eye on this. If VIX numbers start coming up off this low, we could expect the stock market to go down. So in summary of our mini indices open trade equity as of close yesterday, February 14th. And our S&P trade, these are mini contracts. In the S&P 500, we have open trade equity of $2,262.50. In the Dow, we have open trade equity of $4,595. Nasdaq is at $1,185, and this is open trade equity based on close of February 14th again. And the Russell, we have $3,270 in open trade equity. That's total open trade equity of $11,312.50. Now at second support, you see the numbers. S&P 500, we'd recognize $1,825. The Dow, we'd recognize $4,185. Nasdaq, we'd recognize $810. And the Russell, we recognize $2,580. So using second support, or slightly below that as a gauge for adjusting your stops, you'd recognize a profit of $9,400 if you were in all these markets. End of trend. People ask me what the end of trend is. End of trend is the trade triggers on the trends and futures spreadsheet. This is where trends and futures feels the end of trend is, and that's where it will liquidate these trades. S&P 500 has a loss of $234. The Dow has a profit at that number of $3,730. Nasdaq has a loss of $922.80, and Russell has a loss of $591. So if you're trading all these markets and you put your stops at the end of trend and you recognize all that, your profit will be $1,982.20. Not something you want to do, because as you can see, you're dropping close to $8,000 here. In this area here, dropping $2,000. These are the trades we're currently managing in the stock indices. If you have any questions about this, feel free to email me at Gary@trendsandfutures.com. And until tonight, when Trends and Futures issues new positions, be well, trade well, and follow the trends.